All right, friends, here we are for another monthly portfolio update. And I really think it's important, especially now in those times, to continue doing this series because I see a lot of influencers online, other YouTubers who talk about their great investments when times are good, right? Yes, we obviously all are geniuses in bull markets when the markets are going up and everything is growing. It's hard to lose money in these times. But now, obviously, times have changed, right? And we are in for quite a bit of a correction, which I think is also healthy, especially if you're a long-term investor. And I really talk about long-term investing mostly on my channel. I'm not a trader who moves in and out of positions, but really for long-term. And I talk about 10, 20, 30 years and more. So that's why in this video, I'm going to give you a full transparent look into my portfolio and show you how much it went down and why I'm still not at all freaked out and why I'm now actually very excited to buy even more of the investments I've done in the past, while now I get a nice discount for it. Afterwards, I also touch about my passive income, which I usually shared in the past from all the dividends, cashback, and interest. And I'll share some thoughts around that topic as well. And make sure to stay until the end because here I'm going to give you a first glimpse at my new investment strategy that I just came up with, because what worked for me in the past is great, but I made quite a radical change to my investment portfolio strategy and you might want to check it out. But let's kick things off. First things first with my ETF holdings over here on Interactive Brokers. And well, luckily, I am still in the green somewhat. You can see my total P&L is up $315. So that number came down big time. I remember not so long ago, you can probably go back to some of my earlier videos. It was even at $5,000 or more. And don't forget, obviously, I've been investing in Interactive Brokers for a number of years, but I actually started off with a different ETF. That was the Vanguard S&P 500, then sold that with a profit, reinvested it into here. So obviously it doesn't show all the total returns that I had since I started investing with Interactive Brokers. But honestly, I wouldn't be surprised if in the coming days, with all those new tariffs kicking in and who knows what else is awaiting us, we might be in for yet another market correction. But yeah, if I go into my positions over here, you can see basically I only have one holding right now, at least on Interactive Brokers, which is the SPY 5, the one I buy in London, currently the cheapest S&P 500 out there. And funnily enough, my daily P&L is now more in the green than my unrealized total P&L for the entire portfolio. And that's basically the difference between the cost basis and the current market value. So this is how much I invested, and that's the current market value, what it's worth if I was to sell it today, which of course I'm not planning to do. And interestingly enough, I actually got a dividend payment back on March 24th. However, as you can see over here in transaction history, it hasn't been paid out yet. So I should be getting this in the coming days in April because the last dividend has been paid back in January. So quite a while ago, and normally it's paid every 3 months, but sometimes it takes a couple of days until you get it. So that should come into my April dividend income. Right, with this, let's jump over to the second broker that I use these days, mostly because actually from the UAE, it's very easy to use. I really enjoy it. I can do instant deposits fee-free into my eToro account with US dollars. So that's really cool. And that's why for me, it's just super easy to use and invest through it. So if I go into portfolio over here, you can see I have actually 3 holdings. So basically more of the same SPY5 that I buy in London. So that's why .L. And yeah, that's basically the same as I buy on Interactive Brokers. The only difference over here, I don't pay commission on it, but you have slightly higher spreads. For the amounts I invest right now, actually the total cost for me as an investor, it's pretty much the same. And that's why I also like buying it here. And it's really simple. And obviously for me, instant, because I don't have to make a bank transfer, for which my local bank here in the UAE would charge me if I was to send it to Interactive Brokers or Trading212. Then I have also NASDAQ 100 ETF over here that I buy from BlackRock, iShares. And lastly, my only individual shareholding in Amazon. And well, what can I tell you? Your genius investor, Kai, all 3 of them are down. But once again, I'm absolutely not panicking. On the contrary, as I said before, I'm actually excited. Just yesterday, I bought some more Amazon. If I go into this over here, you can see my last buy was from yesterday towards the evening, got a nice discount. And well, what can I tell you? Since then, I'm already $3.8 in the plus. But as you can see, all my individual positions are kind of listed over here, which I also really like. You can see how much you're up or down on an individual buy with the time period. And yeah, I'm really averaging my way down. You can see here when I bought it, the first one was at $214, then $209, $197, $194, back up a little bit at $200. And yesterday, my cheapest ever buy at $188. Now, of course, nobody knows the future, but if we jump over to Seeking Alpha, the analyst ratings are very clear. And obviously, this is just one piece of the equation, right? It doesn't have to come like this. But if it was to eventually go to an average price of 260 one day or even 300, right? Then from the buys I'm doing right now, I'll be really massively in the plus. So that's why I'm really not too bothered with those prices going down, because I know long term I'm investing in a solid company that grows its revenue consistently year on year and has a really healthy gross profit margin of almost 50%. So yeah, in total, you see over here, I have now $42 worth of cash sitting in my account, then my total invested amount is almost $27,000. And don't forget, I only started with eToro towards end of last year. So it hasn't been so long actually that I've been using the platform. And since then, I'm down $1.6 thousand to a total portfolio value of just about $25,000. And of course, most beginner investors, when they see those numbers in the red, they would absolutely freak out and say, Kai, I'm done with investing. This is not for me. I'm investing to grow my money. Why am I now losing it? And I totally get it, right? The first time I did it, I was feeling the same. But then you're not a long-term investor. In this case, I would actually recommend you delete all those apps from your phone, all these stock tracking apps. Don't watch any financial news because you only want to dollar cost average, invest regularly every week, every month, and let it do its thing over time. Markets are cyclical. There will be ups, there will be downs. Just look at the S&P 500 market index over here for many, many years. I mean, we can go back all the way to what is this, 1872 almost. And yeah, it's been always volatility, ups, downs, up, downs, but mostly the trend line has been very much on the upside. Now, yes, obviously, the last few weeks and months since the president of the United States came to office, we have seen little corrections, but that will only last so long, right? It's not going to completely evaporate the entire market gains we had over the last, 40, 50 years. On the contrary, there will be corrections along the line. Maybe we'll fall even under the price of 2022. Could be. But if you hold on to it long enough, then definitely your portfolio should be in the green and you will be benefiting from compound growth over time. And lastly, let's jump over to my third and final broker that I'm using, which is Trading 212. I used to have quite a bit of cash sitting over here, which I now withdrew. And now I only have my two holdings over here, which once again is the SPY 5. Here it's called SPDR S&P 500 ETF, but it's exactly the same. That will also pay me dividends. So all three of my S&P 500 holdings are paying me a regular dividend. And then I have my iShares NASDAQ 100 ETF over here. And same story, both are in the red. But once again, I'm really not too worried. Now, I haven't been actively investing on Trading 212 for a while because, as I said, right now I'm focusing on eToro, but definitely absolutely love the platform because here I can buy completely commission-free any stocks, any ETF. So it's really, really super easy and simple. And that's what I love about Trading 212. And I can really recommend it for anyone starting to invest. You can also set up automated buys very, very easily. So it buys it every single day, week, or month, however you set it up, on a recurring basis without you having to do anything. Just make sure you have money on your account and it will invest on your behalf. With this, we move over to my crypto holdings. And here I've actually done a major change to my portfolio. As you might remember in previous updates, I had a big part of my holding over here on Nexo, where I got really juicy interest on my holdings. And well, you can see now I'm down to only 3,500 worth of Nexo token. If I go over to my wallet, you see here basically only Nexo token left, which are there for a reason because they're actually locked up. Yes, I locked them up previously to get even higher interest. You can see here, 9% I'm earning on one of them, even 12%. So of course, that was very attractive. But now two of them will be coming up very soon. And once they are, I will convert that to Bitcoin and then also pull it off the exchange onto my Ledger hardware wallet. And yes, the interest I earned from it was great, obviously, $2,500 in total. But right now, I'm just not feeling comfortable leaving too much money on the exchange. Plus, of course, also now with the new MiCA regulations, there have been changes in the way we earn interest on stable coins. So yeah, in my case, it just didn't make sense anymore. But it's still a solid platform, my favorite crypto exchange. So if I was to buy some more crypto and so forth, I usually do it through Nexo Pro. So I can definitely recommend it if using it. It's great. I mean, definitely I trust them the most. And while trust is good, ultimately I just sleep more peacefully at night knowing that my crypto is safe on my Ledger hardware wallet. Here we are inside the Ledger Live app where you can track all of that. And obviously it looks like I'm in the plus of 43%, but unfortunately that's purely because I sent crypto there from the exchange into my hardware wallet. So it doesn't really do the best job of tracking your actual gains over time, which is fair enough. That's why I do that manually, where I write it down on my sheets when I do my net worth tracker on a monthly basis, which by the way, if you haven't used yet, then definitely use my link down in the description below to get that free template so you can start tracking your own net worth. Definitely recommend it. So while I don't have the exact number, because obviously I bought crypto over the years at different exchanges, moved them all around. At some stage, I was quite close to almost 200K worth of Bitcoin in my portfolio. So if you compare that to what it's now, I mean, that's a major correction. But of course, in the crypto space, we do see even bigger swings than we see in the traditional markets like stocks and ETFs. So I know that I benefited from it in the past, but that also means that sometimes when it does go down, it hurts a little bit more. But once again, I don't actually check that on a regular basis. I know that it will fluctuate, and if it will drop further, then so be it. Right now, I'm not actively adding more Bitcoin to my positions, even though it's probably a better buying opportunity. I do get paid sometimes in Bitcoin and earn obviously a little bit of affiliate also in Bitcoin, but I'm not actively buying more. Instead, I use my funds to invest into either Amazon stock right now or my ETF holdings. With this, we move to the passive income that I got last month. And well, as I said in the beginning of the video, those numbers have actually dropped. I remember at some stage I used to make over $700 a month just from my dividends, interest, and cashback, right? But now it's definitely down quite a bit. Last month was actually $232 in the form of interest. And that was still a special month because most of it still came from Nexo, because I only moved the last few days away from Nexo. So I still got quite a bit of interest on that. So the biggest part comes from that. The second biggest part comes from my Wio bank that I have over here in the UAE, where I do earn quite a bit of interest. I think it's now 4% on my dirhams, and even on my Revolut, I still do get a little bit of money. On my euros, not so much, at 2.53%, but on my dollars, 4.35%, which is probably one of the highest interest rates that I've seen. Now, granted, I am on the ultra plan, so the higher your plan is, the more interest you get, but that is actually not too bad. And the cool thing is I can withdraw it anytime. So you can see the interest is paid out every single day. And if I need the money, I just click on move it to my other account, and then I can start spending it immediately. So I really like how Revolut does that. Well, in terms of dividends, now technically I did earn a dividend in March, but it hasn't yet been paid out to me on any of the brokers. So I'll update you on that in April. It should be around $200. So again, not life-changing money, but a nice little addition of cash that I will then use to once again re-employ and buy more of the same ETF that paid me in the first place, right? So that's the difference between accumulating and distributing. I just like the feeling of getting paid. Eventually, once that number grows, one day, hopefully they pay me thousands of dollars in a quarter, and then I can still use that money to obviously buy more of it. Or maybe one day I say, you know what, I'm actually going to use that money to pay for our family holiday or what have you, right? So I think that's a nice feeling. Ultimately, taxation-wise, for me, there isn't really a difference. And lastly, I also got some cash back in the month of March, and it comes purely from my Wio personal bank. Whenever I use my credit card, I get 2% cash back on every transaction. So that's been really attractive, and I really enjoy using that. So definitely a nice little cash injection from there as well. So going forward, as I alluded to at the beginning of the video, I would just continue doing the same, dollar cost average my way into my different positions. Right now, not so much into Bitcoin or crypto, because it's already such a large position, as you can see, actually bigger right now than my ETF holdings and shares together. So I want to balance it off a little bit. That's why I'm using my funds to deploy it more into stocks and ETFs, because I would like to have a bit more of a balance. And of course, lastly, my third pillar of my investing strategy is my real estate, but that's sitting right now there, paying me a nice rental income in the form of passive income. But it also brings me to the point of dividend investing. And in the past, I kind of started with dividends, then I moved away from it. And now I think it can definitely have a place in an investor's portfolio. Why I'm saying this? Because obviously I know a lot of investors, when they see market conditions that we have right now, where the portfolios drop and you don't really earn anything from it, right? If you don't have any dividends, let's say you only invested into high growth tech stocks, well, then you're in the minus right now and you lose momentum, you lose fun, you lose the excitement. If you were to invest in stable dividend paying companies, well, at least you would get a steady income paid to you, right? So even if your share prices would drop, ultimately you can still make an income and a living potentially if you have a bigger holding and portfolio size from it. So I think there's definitely point in it. And I will make a separate video about this very soon where I talk about it. Not that I'm now chasing dividend income, but I think it really can have a place in an investor's portfolio. And ultimately, it depends on you, right? What kind of investor are you? Do you look more at total returns? Do you prefer kind of slower growth, but more steady dividend, predictable income over time? So it's really important to understand you as an investor and what you want and expect from your investments. And with this, we come to the final point that I mentioned at the beginning of the video I would touch on. And yeah, I really thought about this long and hard, but ultimately, I love talking about ETFs, cryptos, and all these things, but numbers don't lie. And when I recently came across this chart over here, where the Hermes Birkin bags, these are women luxury handbags, outperformed over the last 35 years, S&P 500, and even gold, well, I really had to be honest to myself and understand that what I was doing, and I just showed you my numbers, was not the right thing. And that's why I actually just made an update in the Smart Money Club, where I informed all the members that I'll be selling all my holdings that I've just shown you and basically reallocate my portfolio into these new asset classes that you can see over here, different handbags. You can see here the Birkin bag, because the returns are just incredible. And yeah, I really see that very, very promising going forward. So I'll probably make a separate video about this very soon. So right after this video, I'm going actually back into my broker and sell all my shares that I've shown you before. And right afterwards, I will go to the Dubai Mall, to the Hermes shop, and buy those luxury handbags, because I think it's going to be an amazing investment. And they do right now have a very special offer, which is only available on April 1st. Thanks a lot for watching. Stay healthy, get wealthy, and to see you in the next one. Ciao.